I want to turn, Rob, to some comments that are being made in the media right now. Of course, not to get too political, but Donald Trump is persona non grata, and certainly over on the likes of MSNBC. And they brought on a CNBC New York Times broadcaster to kind of explain why Trump would be bad for the economy and for markets. I'd like your reaction to this. You know what I'm going to say, but we should watch it and dissect a little. Take a listen.
The thing we were talking about during the commercial break is there's a value in the business world and in life to stability.
Right.
To stability. And just think about the volatility that is going to emerge if former President Trump becomes the president. I mean, I think if there's anything you can count on, it's volatility.
So let's give a perfect example.
Okay.
All right. And Wall Street dudes, if you're too
there for a second, only I see you laughing, right? Like he's like, oh, it's going to be volatility. It's volatility. I'm sorry, but I'm thinking it's been a little bit crazy for the last 3+ years. It didn't actually, did it feel as volatile to you? I actually felt like, gosh, economically speaking, the Trump administration did a lot of good stuff. You think about all those shotgun marriages that were happening, right? Like everybody's running off to Ireland to acquire a company. And so suddenly there'd be this fancy merger with the bigger company in America acquiring the smaller company. This is during the Obama years over in Ireland because they got the better tax, the tax benefit, the better tax bracket. And so Trump's like, wait a second, we had all that money sitting offshore. Let me come up with a policy that helps bring it back. And sure enough, it came back and companies were incentivized to bring that money back on shore. So that helped. You had lower tax rates for businesses, for individuals that helped, people keeping more of what they earned, companies keeping more of what they earned. You had trade policy that actually, dare I say these words, put America first, right? Let's look at trade through the prism of what's good for us, as opposed to always what's good for this class of investors. That's part of what I think was so problematic. For too long, we cared only about the investors. And so capital wound up with way more power, if you would, than labor in that equation. They had all the power. And consequently, the middle class of America was just gutted. And Trump came along and said, okay, we're going to change this. And what do you know? Before March 2020, we saw the biggest rise in middle American incomes, median incomes that we had seen in some 50 years. You got to go back 50 years to JFK in order to see anything like that. So for Andrew Ross Sorkin to sit there and tell us oh, this is going to be scary because of volatility, what do you think of that?
Yeah, no,
he's already been president.
He's kind of recycling the lines you heard back in 2016 where, Trump was perceived or portrayed as this sort of crazy guy. And then Uncle Joe was going to come in and just be a normal kind of staid politician and everything would be fine and settled. But I don't really look back at the last 3-4 years as being particularly calm or stable. We've had more, we've had the biggest inflation shock since the 70s. The international situation is really chaotic. And, we have very kind of inconsistent positioning with respect to our friends, enemies, and adversaries. Multiple theaters of war going on, the Taiwan situation looming. We don't even talk about the Afghanistan withdrawal, but that's kind of what kicked all of this off.
It's yesterday's news, right?
You're right.
It's kicked it into high gear.
It's a very chaotic global, domestic political situation. So, kind of in a contrast with the prior 4 years. So I'm not convinced, that the argument's going to work again. When you think about the politics of all of this too, it's,
by the way, it's almost like one of our viewers. I like his comments, so I'm putting him up. Peace of mind. It's like he's reading our mind. I think I said, wait a second, wasn't Trump president before? Which is exactly what he said. So therefore, where's the volatility? But he's also making, I think, the turn you're about to take. I'll just throw his question in there. Is the financial policy made for the large political donors versus the common man? In other words, is the sort of median income person that we're talking about, everyday Americans, are they getting lost because there's a lot of economic policy being made? Certainly I would argue in this administration, I think Trump took it very personally, the success. Like, he was all over median incomes. He was all over GDP. He was all over, I mean, I know him. Like, this is just kind of how he's wired. It was like a source of pride. I said this before he got elected. I was like, if he gets a good GDP print, he's going to be waving it around. Look at this growth. Look at this, and so he cares about that almost as a matter of personal pride. So I think, you look at the reality, though, of Joe Biden, who maybe doesn't even understand what GDP stands for, dare I say, but he's caring more about, okay, how do I keep my donor base happy? How do I keep my base happy? And those are challenging things to do if you're so wedded to the politics of it, which I think is where you're going and where our viewers going. Then how do you actually get anything done?
Yeah, and I think specifically to Peace of Mind's question, the donors have done well under Biden. Biden's donors have probably, on balance, done well. The stock market is up. Real estate markets are up. So they're, like we talked about last time, they're the asset owners, but the actual voters who are supposed to line up behind the Democrat coalition, these are not historically the asset owners, or statistically the asset owners in American society. When you think of the demographic groups, particularly young people, young people are really hit hard by the inflation. They don't have assets that have appreciated, but at the same time, they're looking at rents that are higher and cost of living that's higher. And when can they ever buy a house? The houses all went up in price. The interest rates are higher. So I think that's where you're losing them. And I in my conversations with young people, actually, I had one the other day, I think a lot of them aren't necessarily aligned with the Republicans on a lot of issues, but they are not happy about the economic policy and how it's all shaking out for them.
Makes sense. All right, let's go back to our friends over at MSNBC and hear a little bit more of this conversation, because they're reaching like near hysteria right now, in part because of the polls you may have seen this week. We got 5 out of 6 swing states that came out in New York Times Siena poll showing Donald Trump way ahead. I mean, really, really way ahead. And in the Sun Belt, he's doing especially well. So this is causing a lot of concern in the halls of MSNBC. And they're saying that it's going to be an economic catastrophe. Let's go back and listen to Joe Mika and CNBC guy.
Too busy counting your money right now, you may want to look up at me, because let me tell you what the world looks like if Donald Trump's elected president of the United States. I mean, and I know this. I went to Alabama. I took one Econ 101 class, and I read Sports Illustrated in the back. But even I know this. Donald Trump is going to take control any way he can of every lever of power possible. He's not going to like interest rates high, so he's going to lower them. He's going to press. He's talked about taking control of the Fed. He'll do it. The inflation, seriously, all I can say is go to Home Depot and buy some wheelbarrows, because you're going to be like shoving dollar bills around in your wheelbarrows. That's just one example. Right. If he takes control of the Fed, you know what he's going to do. Even when it's going to be the worst thing for the economy, it's going to be inflationary. So he's going to lower interest rates.
I think that the business community knows this, though, too. He will find a way, in his own way, to try to juice the economy. The problem is it's going to be a sugar high. By the way, we saw this before. We saw this movie before. And in everything he's done, there is a sugar high, and they want the sugar. But the question is what happens after the sugar? And that is the real conundrum. And beyond
okay, I just got to jump in again. I mean, for goodness sakes, sugar high. We're at Dow 40,000 with massive debt loads. For goodness sakes, people. I mean, you think Trump's going to give you a sugar high? What do you think you've just gotten? And by the way, the promise of more, with Biden saying, I want to give out free student loans to everyone. I'm going to forgive you all for all that money you spent, whether you graduated or not. Tom, Dick, and Harry over there have to pay for Jane, Charlie, and Bob, right? I mean, Tom, Dick, and Harry didn't decide to take out all that money. And yet Joe Biden, in his ultimate wisdom, wants to actually take that money and I'm sorry, but that is more inflation. And you sugar high, we may be looking at it. I don't entirely think so, because I agree with a lot of the premises on growth, et cetera. But really, Rob.
Yeah, it's sort of, I don't understand the premise too, that because he had a 4-year term, and I don't recall I mean, certainly, I guess Trump was always an advocate of like lower rates, right? And he sort of spoke
Yeah.
freely on the
No,
topic, but
I mean, what real estate investor does not love low rates, right?
but where was he? What is he going to do? I mean, like they speak as if he's not like subjected, like they're like he could just go in, and is he going to get rid of Powell and
Oh,
replace him with
I mean,
Clinton?
that's what they're alleging. They're alleging that he's just going to get rid of the Federal Reserve entirely. In fact, Wall Street Journal had a big front page article on that about a week and a half ago. They said they're drawing up plans to get rid of the Fed. Now, I joke about it because I'd love to get rid of the Fed. And I think it wasn't Milton Friedman who said you could replace the Fed with a computer. You think about AI nowadays. I mean, you might actually get more sensible decisions coming from a computer than you're getting from the likes of Powell. Because for whatever reason, even though I sat here on my show at this very desk and pounded the table about inflation and said you're going to get it, back in summer of 2020, I was even alarmed about the second stimulus check. I'm like, there's no way this is going to end well from an inflation standpoint. And yet, no one at the Federal Reserve saw it, and they just continued printing all the way through 22. It's wild. I mean, the transitory, right? Transitory inflation, they kept telling us. So that was just some kind of dream. And when reality came crashing back, it is what we're dealing with right now. And that's why it's going to be so hard to unwind. Once inflation starts, it's very hard. The train has left the station, so to speak. So yeah, I kind of would love to get rid of the Fed, but I'm going to tell you this. We still need those guys, dare I say, and we need them for those really challenging times when all hell breaks loose, right? I think back to 2008 and I think back to March 2020, and that's when you need the Federal Reserve. I mean, you just didn't need the Fed in January of 2022 doing what it was doing. Is he going to get rid of the Fed? No. Like, I'm sorry, but that would be, that's like, again, this is where they lose trust, right? Like you're watching this and you're like, you guys are the boy who cried wolf over and over and over and over again.
I mean, the Fed was created by an act of Congress for a new kind of central banking system we need legislation, and this has happened before in American history. You could have like a third Federal Reserve Bank of America or something, right? But, it's not something the president unilaterally does or has any kind of possible impact. He can appoint nominate governors to the Fed, but that's about it. So
Scarborough is showing his lack of economic intellect. That University of Alabama 101 econ class didn't serve him so well. He might have wanted to have avoided the Sports Illustrated and paid a little bit more attention in class, because you're right. I mean, this is not something that can just be easily undone. And yet they're presenting it to their audience as though it could, which is frankly hugely disrespectful to their audience as well.
Yeah. And I mean, I don't know. I look back at the first Trump administration. I mean, I think he was kind of respectful of these independent agencies, if you think about it, right? It's like he didn't run over them. I mean, even with like Tony Fauci, he let him kind of maybe to a fault kind of stay.
You're very diplomatic, Rob. Yeah. You're very diplomatic. I mean, yeah, he gave Tony way too much power, really, in that sense. I mean, if you want to criticize him, it was that he was at times very sort of, respectful of them and their space. Now, I don't think Biden is as much. I mean, I have a whole theory that somehow one of the reasons why they kept telling us it was transitory inflation was because there was pressure on Jerome Powell vis-a-vis Janet Yellen coming from the Biden administration saying, hey, we want these low rates. We want you to keep printing. Let the good times roll. I mean, I think that Biden behind the scenes actually wields a whole lot of power. The difference between him and Trump is like whatever you see, what you see is what you get, right? Donald Trump doesn't like you as a reporter. He shouts it out for the whole world to hear. Whereas what Biden will do is very cleverly behind the scenes have his minions make sure that you're shut out of the press conference or worse. So it's just a difference in approach, but you're right. I mean, for them to say that, though, it's mind-boggling how irresponsible and aggressive it is.